Good day, everyone! For today's lesson, we will be discussing the concept of accounting and the nature of business, starting off by defining what is accounting. Accounting is defined as a service activity whose function is to prepare financial reports that will provide relevant information about the business. It can also be defined as the process of recording, classifying, and summarizing transactions and events which are financial in nature and interpreting results thereof. Now let us define the meaning of business, its motive, and role in society. A business is an economic unit that engages in buying and selling of goods or services. A major concern of a business is how best to use its resources, machines, raw materials, labor skills, and number of men to employ. When a person wants to put up his own business, the primary reason is to earn profit. Profit generates more resources or funds for the business. With more funds, it is possible for business to expand. You need more workers and this will create more job opportunities. You need money to start a business. The primary source of capital is the owner or investor. If the entrepreneur or investor does not have enough funds, a secondary source of capital is a relative, friend, bank, or cooperative. The microfinance programs such as Tulay sa Pag-unlad Incorporation, Bangko Kalayaan, BPI Globe Banco, and the Rural Bank of the Philippines help low-income Filipino entrepreneurs fund their project. Any money-making venture is risky. The higher profit you desire, the more risky the venture is. Risk is the element of uncertainty in an outcome. An endeavor like a business has always an element of uncertainty. It is not certain that the operation of the business will turn out well, nor is it certain that the owner will recover what was invested. The earliest bookkeeping records were used to keep track of pyramids being constructed especially in Babylonia in 2000 BC. In 3500 BC in Assyria, they started to record taxes, materials, labors, and overhead. The first accounting book was written by Contrugli in Naples. The modern-day double-entry bookkeeping system could be traced from the book prepared in 1494 by an Italian mathematician, Fra Luca Pacioli. It is entitled Summa de Arithmetica, Geometria, Proportioni et Proportionalita. Fra Luca Pacioli is the father of accounting due to his model of Venice developed to help Italian merchandise in their trade practice. In 15th century, Italian merchants required employees to keep their track of properties and debts. From their records came the terms debtor and creditor. In 16th century, trading in foreign ports started, profit calculated after a particular voyage or trip. In 19th century, processing of information turned from manual to electronically assisted. Forms of business organization. Sole proprietorship. This is a business set up and managed by one person. Most small businesses such as beauty parlors, dress shops, barber shops, and bakeries are sole proprietor owned. Partnership. This is a business owned by two or more persons called partners who contribute money, property, and talent into a common fund for the purpose of sharing profit among themselves. Most often, the partners are also the managers. Professionals such as lawyers, accountants, engineers, and doctors usually put up a partnership or consultancy firm. Corporation. A business organized as a separate legal entity from the owners. It means that it can conduct business by itself, enter into contracts, buy and sell properties and stocks. An investor buys shares of stocks and becomes a shareholder. It is managed by a board of directors elected by the shareholders from among themselves. Types of business operation. A service business is one which provides service for a fee to clients or customers. A merchandising business is one which buys and sells goods or merchandise. A manufacturer is one who buys raw materials, processes this into finished goods, and then sells this to customers. Career opportunities in accounting. Public accounting. It is a career field open to firms and individual certified public accountants who offers to the public for a fee with expert services like bookkeeping, auditing, accounting tax, and financial planning. Industry accounting, also called as private accounting, is another career field where more accountants are employed than in public accounting. It is because of the huge number of merchandising, manufacturing, or service firms. Government and not-for-profit accounting. It is another career field where one works as accountant, auditor, budget officer, or analyst in any processing head of any of the government agencies, religious organizations, labor unions, colleges and universities, trade associations, and many others. Research and education is another professional field where the accountant assumes the role of a researcher, teacher, and reviewer. The accounting profession requires an accountancy major to take up the following courses, each of which has a large body of accounting concepts and theories. Here are the different accounting areas: basic accounting or bookkeeping, financial accounting, cost accounting, management accounting, auditing, government and not-for-profit accounting, tax accounting, and forensic accounting. Professional regulatory bodies. The practice of accounting profession, among others, is governed by regulatory bodies such as Professional Regulation Commission, Board of Accountancy, Philippine Institute of Certified Public Accountants, Securities and Exchange Commission, Bangko Sentral ng Pilipinas, and Bureau of Internal Revenue. Accounting is a bridge between the company and the interested parties or statement users. From the business activities which accounting accumulates, reports will be prepared and vital information communicated to the users. The following are the direct users of financial information, while these are the indirect users. Accounting Information System. It is an orderly way of accumulating and reporting business transactions through a process of analyzing, measuring, recording, classifying, and summarizing, and from which reports are generated for proper communication to decision makers. For the AIS to be effective and efficient, 5 principles must be followed. The cost principle prescribes that the AIS of the firm must have good internal control. The cost-benefit principle prescribes that the advantages enjoyed from installing the system must outweigh its cost. Relevance principle prescribes that the information must be reported promptly and the information must be useful to enable statement users to reach a conclusion and make a decision. Compatibility principle prescribes a system designed to fit the unique characteristics of the company, its personnel, activities, and structure. The flexibility principle prescribes that the company system should allow for changes. There are 4 financial statements from which vital information can be extracted. First is a statement of comprehensive income. It shows how wealth is produced by listing the revenues earned and expenses incurred by the business. Statement of owner's equity shows why the net worth changed by listing the activities that caused it to increase or decrease. Statement of financial position shows how the wealth of the business stands by enumerating the assets, liabilities, and net worth of the business. Statement of cash flow shows what happened to the cash by enumerating the activities of cash received and cash used by the business. Qualitative attributes of financial information: understandability, relevance, reliability, and comparability. Accounting concepts and principles. Principles are laws or rules that guide the conduct and practice of the profession. In accounting, these are specially used in identifying, measuring, and reporting financial information. The following are the accounting principles used in the preparation and presentation of financial Task 1. Business entity concept. This concept assumes that a business enterprise is separate and distinct from its owner or investor. Exchange price or cost principle. Assets, liabilities, revenues, and expenses should be recorded based on cost. Cost is the amount agreed upon in an arm's length of transaction. Going concern principle. According to Pass 1, paragraph 25, it is expected that the business will continue to exist indefinitely. Accrual assumption. Pass 1, paragraph 27 to 28 requires that financial statements be prepared under the accrual basis. Objectivity. The concept of objectivity requires that assets acquired must be verifiable and substantiated by documents such as invoices, vouchers, or official receipts. Reporting period is also called accounting period. This will enable the enterprise to prepare periodic financial statements. Measurement in terms of money. All business transactions are measured and recorded using only one unit of measurement. So there you have it. Now you can confidently say that you have sufficient knowledge with regards to accounting and the nature of business. Thank you for listening and have a good day.